Roger Howell. I'm the CEO of Houlihan Capital and a member of the board of directors of the Executive Club. It's my pleasure to welcome you here on behalf of the Executives Club of Chicago. Houlihan Capital is honored to be a presenting sponsor of today's program alongside CTS Impact. Houlihan Capital is an investment bank and valuation firm focused on M&A in the lower middle market and providing valuation services for the PE ecosystem. So we love the conversation today. We've had the good fortune to work with many of the private equity, banking, law, accounting, and wealth management firms in attendance today. So it's good to see some welcome faces. We shared a copy of Houlihan Capital's micro middle market report. It's got some interesting insights in market activity today in one slice of the market. Before we begin, allow me to thank the members of the Exec Club's Board of Directors and Board of Advisors in attendance, as well as members of the club in general. The club also would like to thank today's featured sponsors, which include ADP, Korn Ferry, Riveron, and Sidley, as well as all the Signature Series season sponsors whose generous support makes excellent program like today's possible. For our session today, we're all here for the private equity discussion, and private equity has a long history in Chicago. It's a rich and storied history. Over the years, the city has become home to several very influential private equity firms that have been instrumental in shaping the industry. The firms have played a key role in funding a wide range of businesses in various industries. It's really cemented Chicago's reputation as a leading financial hub. This includes helping to build a very robust ecosystem of service firms that support both the businesses and PE firms in transactions and capital management. Joining us today is an exciting panel. We have Marty Nesbitt, who's a senior partner, co-chairman, and co-CEO of the Vistria Group. He's also a current member of the Executive Club's Board of Directors. We have Susan Yoon, founder and managing partner at Kinsey Capital Partners. And we also have Bryant Cressy, manager partner of Cressy & Company, who also founded several PE funds. Today's conversation will be moderated by Penny Pritzker, founder and chairman of PSP Partners and former U.S. Secretary of Commerce. So a very distinguished panel. Please join me in giving them a warm welcome to the stage.
Well, welcome everyone. It's really great to be here for a very timely discussion about the evolution of private equity in Chicago. I've had the pleasure and privilege over my career of building a number of businesses, all based, based here in Chicago. So it's really exciting for me to talk to some of the great active private equity folks who are really leaders in our private equity community today. We at PSP Partners, we focus on industrial and business and technology services and real estate. So that's what I do in my day job when I'm not interviewing this distinguished panel. Today we're going to talk with folks who are really active in the business community, in our community, as well as all over the country in their various fields. But each of us stands on the shoulders of firms that have come before us. And Brian, you were a founder of GTCR, a well-known firm still active today here in Chicago. Madison Dearborn, a firm that was founded in 1992 by a number of the folks who were originally part of First Chicago. And I think, Marty, you were at one point very involved at First Chicago. So we have a long history here in our city of very successful private equity firms, and it's been an incredible hub. So our panelists today, it's a real powerhouse, and I feel very lucky to be on stage with the three of you. Brian Cressy, as I said, who is our industry pioneer and co-founder of GTCR, is really helped shape the landscape of private equity here in Chicago. Suzanne Yoon, who founded Kinsey Capital Partners, focuses on revitalizing lower middle market companies through technology and operational excellence. I'm very excited. I was learning a lot about her portfolio companies before we started. And Marty Nesbitt, who, as you heard, leads the Vistria group, and it's a firm that is been extremely successful across a number of different areas of investment, but also integrates social impact into the firm's success. And each of these folks have played a transformative role in private equity. Today, I'm hoping to do three things in this conversation, so listen up, folks. First, I'm hoping that we're going to talk about some emerging opportunities and sectors, including what's happening in digital transformation, innovative financing structures, or strategic capital development. I'm hoping some of our panelists will talk a little bit about what's going on in our macro environment and how it's affecting your various portfolio companies, or how you're thinking about what you're going to do next. And then I hope all of you come away knowing that Chicago's business environment remains strong, that we are ranked #1 in the U.S. U.S. metro areas for corporate relocation and expansion for 13 consecutive years. And I think one of the reasons that that is true is not just the innovative universities that we have, and not just the folks who have come before us in private equity, but I think it's because of the great talent that exists in our city. It's about you guys and the younger people coming behind you that you're training. So with that, we're going to jump right in. And so I'm going to ask each of you, and I'll start with you, Brian. Can you briefly tell us a little insight about your journey in private equity?
Yeah, I got into private equity in the 70s. When I was at school, I realized I wanted to help young companies grow. That's what I wanted to do for a job. And then I heard about venture capital, which was nascent in the mid-70s. And I did all this work, sent out all these letters, and I got into venture capital through a professor. And he introduced me to a great group in Chicago, at First Chicago. I joined them. We left, started our own firm. The rest is history. But I will say, I found venture capital, which is what it was called then, in private equity, exciting, just what I'd hoped it could be, because we had the freedom to help build companies, the tools with money and great partners, great ideas. We could help build new companies and support the American entrepreneurs. So I was excited then, I'm excited now. Thank you.
That comes through. Suzanne, tell us a little bit about your journey.
So I know you started to talk about First Chicago. I was at the other bank in Chicago, LaSalle. So I went through ABN AMRO's training program, and initially it was just because I knew I wanted to be on Wall Street. I really wanted financial independence. And as I started to go through my rotations, I ended up in what was our special assets group, or the off-balance sheet private equity portfolio of the bank. So I think a lot of PE in Chicago actually started in the banks in Chicago, and it was great training. I subsequently moved to New York. I was on Wall Street, and then when the market crashed, I realized in 2008-09, I really wanted to be somewhere with long-term locked-up capital. I joined a private equity firm on the East Coast called Vistria Capital, but I am a native Chicagoan. My parents immigrated here. I grew up in an immigrant family. My father was a small business owner, and I just really wanted to be back here. And so I ended up moving back. I was commuting to New York for an extended period of time, saw a real opportunity to invest in the lower middle market, where businesses still really needed more hand-holding, which is, we're pretty roll up your sleeves and in the business, but also real need for technological resources and technology, and today even more so than ever. So was able to partner with a firm here, and really came back home to start Kinsey. And actually along the way, I reached out to Marty, who had started Vistria at the time, and he just quite candidly told me it's the hardest thing you're ever going to do. Don't do it. And he's like, but if you do it, you got to be all in. And I'm really excited to be here and headquartered in Chicago, in my hometown.
Terrific. How about you, Marty? How about your journey?
I will try to make a long story tolerable. Unconventional, I think, path to private equity. I started out first after business school at the University of Chicago, investing in real estate at a well-known firm here, Jones Lang LaSalle. It was LaSalle Partners at the time. And, sort of backhanded, working on a real estate asset class, stumbled across sort of some inefficiencies in this little real estate sector and thought maybe there's a way you could exploit it, put together a business plan, got super lucky and met Penny Pritzker. She's so many things I'm going to say today I learned from her, so she actually doesn't really even need me on the stage.
That's terrible.
So anyway, left JLL, started a business in a partnership with the Pritzker family. We had a lot of success, ended up buying my biggest competitor in a partnership with a private equity firm, and then selling the business to a private equity firm. And just like I discovered nuance in the parking space, the parking business, kind of stumbled on across sort of a nuanced way to look at private equity and thought, man, if I were going to do this, this is the way I would think about it and do it differently. My partner, Kip Kirkpatrick, was going through his own transition at the time, and he had a more conventional path in private equity, also coming out of that first Chicago family. And so through dialogue and collaboration together, we sort of iterated on a thesis that ultimately became Vistria, which was investing at the intersection of public and private interests, leveraging the dynamics of private capital to solve some bigger social problems, thinking that if we could generate good returns, we would raise a lot of capital or we would solve a lot of problems. And so that's how I ended up here.
Excellent, excellent. Okay, so Brian, you've seen the arc of private equity over the past decade and how it's changed. What are the trends that are shaping the industry today?
A couple. One is, back when I started our first fund, most funds did a variety of things. We had an investment in a robotics company, a welding robotics company, energy prospecting and drilling companies, a startup computer company, and lawn service. We had a variety. Luckily, the returns turned out really good because some of the young companies we started and built did really well. But the contrast to today is more about specialization, going really deep, understanding some niches really well so that you can invest intelligently, and then also help the companies improve how they do business and how they grow and connect with customers and good people. So it's changed incredibly, and that's going to continue, which we can talk about later into the future.
Terrific. So, Marty, you were talking about, you work at the intersection of, business and the public services and public sector. Talk to us about that intersection and a little bit more about your strategy at Vistria and how your businesses are not only doing well, but also contributing to the public good.
Yeah. I think much like Brian referenced, went from sort of all about sort of picking the right businesses and having the right financial structure to then I think private equity 2.0 was can we have operating talent to enhance performance and returns, and then more specialization in the industry. For us, the next iteration was look, we live in an increasingly regulated world. There are some industries that are super highly regulated. And our notion was, how can you be successful in some of these industries unless you really understand policy? And that taxpayer dollars actually can't solve all of the problems that we have. And can we leverage the power of private capital to help? And so that's why we started Vistria. Vistria means the power of three, the power of investing with real financial expertise, real entrepreneurial and operating expertise, but also a policy perspective to inform the right decisions, take the right risks, and make a significant impact. So the idea was, both capitalism and sort of business and policy have great attributes. They have negative attributes. I mean, the quest for innovation, continuous improvement, efficiency, profits are all positive attributes for business. The quest to solve problems, make people's lives better, improve the quality of life and standard of living are all positive attributes of policymakers. Can we take the best of those two disciplines, bring them together to really drive change? And there's a funny thing about capitalism, right? If you have success and generate high returns and make money pursuing something, others will follow. And our hope was that other players would join in this effort to make an impact, and that we could really broaden the way people think about their obligations with private capital. So not only seeking returns and great products and great businesses, but also having a positive impact on the communities that we serve.
So, Suzanne, your firm's mission is, and I'm going to quote this, to create lasting positive outcomes by investing in exceptional companies and partnering with exceptional people in the lower middle market, and with a specialty in manufacturing also, I think. Tell us about your thesis and also the focus on people and why that's so important.
So I think Brian started to touch on it. Marty has also touched on it. Private equity has evolved significantly from when I started, where it was a lot about financial structuring, right? And today, that's just table stakes. If you're not really good at financial engineering, you might as well not even think about being in private equity. But and a lot of times, like over time, and when I look at the history, interest rates went down. People looked like geniuses because you're doing LBOs. Like today, it's about, you've got to maintain your leverage, you have to create value. And there's really, especially in the lower middle market, when we are acquiring businesses that are usually like sub 15 million of EBITDA and usually in that range of 5 to 10, right? So the revenues are 30 to 100 million of revenue, 5 to 10 million of EBITDA. And a lot of them are founder-led. And they are 30, 20, 30, 50 years old. Our last business was founded 54 years ago. We acquired it from the founder. And as many of you know in here, change management and that value creation is so critical to the returns that we need to really get to for our investors. And the only way to do that is really with the right people in the right seats. And so when we say exceptional people, it's resourcing. We have a formula at Kinsey. It's accelerated value creation as a function of the right capital. It's capital plus operations compounded by technology. And so, and if I would have to add something, it would actually be human capital, because there's no way to get all of that to work unless you have the right people and the right resourcing in place for a company that is small, and they've really been operating the same way, especially a manufacturing company. And now, how do you make decisions faster? We have labor issues, becoming more efficient. Are we buying, from Brian's robotics company today? We probably are, right? It's probably much larger than it was when you started it. But I do think it's all about people. Like, that's going to be the big differentiator going forward, because everyone's heard of AI. So, what is really going to change? It's the relationships, it's how we manage people, and making sure that we're resourcing the companies properly for that value creation.
All right, we'll get to AI in a minute, but I want to ask you guys about capital raising. It's a tough environment out there with what's going on in the markets, what's going on in the macro environment. So talk to us a little bit, each of you, how do you see capital raising in 2025 and beyond?
So we aren't currently in the market. I'm kind of happy I'm not right now. But I will take it from the standpoint of, I think if there are good deals, you know, I think what we really have to focus on right now is the structure. So the debt markets are still pretty robust. We have seen still leverage at pretty significant, you know, leverage numbers. So if you have a good deal, is it, you know, are you able to close? But I think some of the regulatory yo-yoing that has been going on is creating a lot of pullback, even in the debt markets. Like over the last 2 weeks, I've seen it. So I do think it is challenging, and then obviously with the markets and how LPs are looking at their total portfolio is also challenging. And so I'm not in it right now, but I do think it's going to be tough probably.
Well, I just came out of it. It was really hard.
Yeah.
Look, I mean, obviously, sort of has slowed down in the growth of the equity markets, real volatility here recently. But the whole numerator effect with a lot of capital allocators means that a lot of them are over-allocated to private equity. You know, high interest rates in the recent 24 months, 36 months have meant that there's been, you know, an absence of liquidity, so people aren't getting capital back, which means they have less to allocate to private equity. So that makes it really tough. I mean, I think we work twice as hard to raise just a little bit more money than our previous fund. Having said that, I think having a good investment thesis and a good track record, some loyal LPs has allowed us to sort of slug it out and make it through and raise a good fifth fund. But I think it's going to remain challenging for the next 24 to 36 months. I think the end is much further away than a lot of people are prognosticating. I think it's going to be a tough slugging for a while. I don't think we're going to see the kind of liquidity this year that people thought we would see. I think a lot of owners haven't come to grips with the fact that things are going to trade at lower multiples, which means there's just not as much activity in the marketplace right now. So I think it's going to remain tough for a while. I don't know.
Brian, what are you seeing?
Yeah, it's been a tough market to raise money in for 4 years, but we've seen it before in the early 90s, early 2000s when the internet crashed. And it's tough. Again, our last large fund we raised for private equity 2 years ago, it was a long slog. We got it done, came out well. And right now we're in the market for a venture firm, and First Cressy Ventures, and they have a good track record. We're innovating a lot in healthcare there. People like the innovation. We're raising much smaller funds. So those are going pretty well. But as Marty said, a lot of that is loyal investors who have done well and like what the firm's doing. Because it's a smaller fund, that doesn't touch the whole market and the fundraising issues that are out there. And I agree with Marty. I think they'll be out there a couple more years. Liquidity drives the engine. That's the start of everything. And I don't see that coming for another 18 months generally.
Yeah, I would agree with you. Yeah. Suzanne, you raised the issue of AI. You know, how do you see AI playing a role in investment decisions or in your portfolio company management going forward? So,
you know, we actually have approached it really kind of systematic, like with a process. So where are we looking for efficiencies? And I would tell you there are real efficiencies coming out of the usage of AI. Like within the operating companies themselves, we're also trying to figure out, you know, can we use AI within our own processes, systems, and we're starting to implement those things. So it's just, first of all, it's like efficiency of your employees, existing employees, and then secondly, it's are there areas where you can actually, unfortunately, like cut heads, right? Because that's really what's going to create more like EBITDA per head. But there's also, I think, the real opportunity where is really growth. Like how do you use AI to continue to drive growth and there's so many use cases, but we're doing it at manufacturing companies, anywhere from estimating to project management, and being able to implement processes there where the AI engines are actually going to start hopefully taking all the data. But at the end of the day, if you don't have clean data, it's very challenging. So I think that there's going to be a lot of work around that, and I'm seeing it too. I have kids in high school right now, and the stuff that they're learning right now in high school and how to use it. I mean, it's really changing. It's going to change everything in the next, really like overnight.
I would agree. Brian, how about you? Tell us about how you're, approaching investment in technology or AI or different innovative sectors.
Yeah, technology really can help us improve patient care and outcomes. Some of our companies are revolutionizing care for chronic conditions, women's health, lung issues, heart disease, but the reason is our current system, patients see the doctor every 4 months. The problems happen in between the visits, and the doctors are too busy, and no one's monitoring the patients. With technology, we can start to monitor the patients. You know what you're looking for, and have prescription to keep them in bounds so they don't go to the hospital, so they don't go to the emergency room. That makes a real difference. Patient health and patient costs are driven down by that. That relies on technology, and it will be then AI to help with the monitoring, the measurement, and the response. So that's going to work real nicely with a lot of young, innovative companies that are going to improve patient health and lower costs. So it's going to be very exciting, but it's got to be implemented narrowly to improve business processes, not as an overview, hey, AI is here, what a great day it is. It's got to be specific processes.
Yeah, I found that that's the real challenge in the middle market, which is, one, finding the specific use cases for AI, but then also having an environment ecosystem where it becomes a priority to the management team. Because you're in the middle market, thinking about some future technology is hard to get them to focus on when they're thinking about a 100-day plan. We got to execute this strategy. We got to enter these markets. We got to deploy this capital. We have to think about M&A, and trying to create an ecosystem where middle market companies can focus on how will AI impact my business? How can I use this? This is a challenge for us as owners. But interestingly, for our own firm, what we've realized is that even as a firm, we don't know everything that we know, right? I know what I know. I may know what Kip knows, but I may not know what a senior partner that's working in education, everything that they know. So we're thinking about how can we use AI to make all the things that we all know as a firm accessible to everybody. So all the research we do on theme development, all the deals we do, all the diligence we do, can we put that in a space and make it accessible to make the whole firm smarter? And the things that we do, the experiences that we have collectively, can we make those accessible to everybody?
Are you having to revisit your tech stack to do that?
Yes.
Or,
yeah, and work with an outside firm to develop a whole new platform.
Strategy, yeah,
like
exactly.
this, a fresh start. And have a disciplined team, like, we've got a dedicated internal team that part-time collectively spends time on this and driving this idea forward. Now, whether we come up empty or not, I don't know. But I don't think you can afford to wait and see what happens. I think you have to be in the mix and create innovative ways to use the technology yourselves. Otherwise, you'll just end up being behind.
So I sit on the board at Microsoft, and I keep saying to Satya Nadella, okay, tell me how to do this. Tell me. He says, you just got to use it. You got to use it every day. And I don't know about all of you. I do, and now I don't know how I survived before I had this.
It's incredible.
Yeah.
I mean, the amount of information you can have at your fingertips, and as my husband would say, this is knowable. and you ask.
Right,
But then, of course, you get in a whole argument with it. That's not exactly what I was asking you. Help me figure this out. But I agree with you. I think you have to I think you just have to start. And the tough part is figuring out the business processes to save money. And, but Microsoft is using itself as an example. So it's trying to, since we've adopted AI in every one of our products, and it's now trying to use itself in, let's say, HR or in marketing or in sales, et cetera, as an example to then use for its customers. Now, obviously, those are for large customers, but it's coming, it's fast. The adoption is fast and the change is fast, and you can't wait.
You know, we were working with an outside consultant who had spent a lot of time developing the technology inside one of these big firms, and decided to go into academia and teach all about AI. Anyway, when he left, there was a problem on the table that the firm was trying to solve. And his projection in his mind, but when he left the firm, was that it was going to be 3 years before they figured out how to solve this big problem. And he said, much to his surprise, 6 months later, they had solved it. I mean, the rate at which the technology is evolving is mind-boggling.
Yes.
So I just don't think you can afford to be left behind. You got to be experimenting with it and trying to figure out how to use it in your own business.
Exactly. So Brian, I'm going to switch a little bit and talk about, what are the most important leadership qualities that drive success in private equity-backed companies? What are you looking for?
I look for a person that is passionate about creating great change, really improving our world, improving the way things are done, and then a person that can inspire great people to join them. The ones that have the vision tend to attract the really good performers to join their team. And I look more for that than for technical knowledge, because they can get the people that can do the work and build a great company with a great mission and vision. So that's what I love to see.
How about you, Suzanne? What's the most important characteristics that differentiate a successful entrepreneur from those who fail to make it?
Well, it's interesting because the three of us are all entrepreneurs, right? We all started our own businesses, and I think about that a lot, like what makes an entrepreneur successful. And I think one, I agree with Brian, passion, vision, ability to inspire, but at the core, it is so hard to be an entrepreneur. It's so hard to start a business and build it. And one of our core values at Kinsey is relentless. And just having that relentless spirit, because there are a lot of times it's very hard and you just have to get up you have to get back up and keep going. Life, and I think there are tons of boulders along the way and rocks, and you've got to figure out how you break through those challenges when you see them. So I also look for that as that relentless, the grit, the ability, to humility. It takes a lot of humility to be an entrepreneur.
Well, I think, you're right. Both humility, relentlessness, these are important characteristics. Marty, what advice do you give young entrepreneurs or professionals? Particularly, talk a little bit about values and business and communities.
Yeah.
I mean, you've had a big impact on a number of businesses.
Yeah, I do think it's really hard to have success in anything unless, there is a cause, a mission, something that people believe in. And I think anybody who's thinking about starting a business, growing a business, running a business, you have to have a cause. You have to have a reason why you're doing it, and I don't think it can just be money. I think there has to be a reason that you're trying to make a difference in the world. I think it's a unique time when we all have to be super creative about how we approach advancing our communities, how we think about what really is the obligation of private capital. it can't be just about generating more profits. I think that puts us on a spiral to a bad space. But I think, look, I think this whole idea, this whole notion of what capitalism is, it's not science, right? We invented it. We invented it to make ourselves safer. We invented it to make ourselves more prosperous, have a better quality of life. But since we invented it, we can change it, right? I think it works over a certain horizon, but if we don't tweak it to make it a little bit better, we end up in a bad place. So I think we have to say, what are our obligations with this capital to also improve the state of our communities, the state of our, however you define a community, if it's a local community, a regional community, a national community, international community, that has to be built into how we think about allocating capital. And so, you know, I hope that Vistria and other firms that are pursuing this discipline are inspiring young people to have that as part of their ethos, that there's more to it than just making money. There's an obligation to make the place we live better. So I hope to encourage people to pursue opportunities that give them the ability to do just that.
So last question for all of you, a little bit of a lightning round. I'm not going to get into the macro environment of interest rates, the dollar, tariffs. I'll save that for another panel and another conversation.
We may never leave.
Yeah, exactly. But I am going to ask you, are you optimistic? Are you pessimistic? Are you cautious? Are you leaning in? Kind of where are you? How are you thinking about things right now?
Yeah, in the short run, I'm somewhat cautious, but I'm optimistic. And what I advise our people to, it's kind of like chaos theory, what's going to happen the next year. It's too many possibilities to predict. So I tell people, when things are uncertain, take what you do well and just keep doing it and drive that. And that's what we're telling our companies, drive what you do well, that's going to work. We don't know what's going to happen in the environment, so keep doing what you're doing well.
And I think I would just add, you know, uncertainty certainly creates opportunity, and that is, you know, what we're looking for. So I think despite all the challenges that are, you know, in the market today, there's certainly opportunity. So whether it's buying opportunity or displacing competitors or however that, you know, plays out for each of our portfolio companies. And then also I think for the market, it will be, you know, there's always buying, you know, this is like the time to buy. So I'm actually, you know, excited about what that displacement kind of, you know, what the displacement right now is going to, you know, show up with. And I think it's going to be some really opportunistic opportunities.
That's a loaded question. I was just sitting here thinking about,
Marty, when was the last time I asked you an easy question?
So I'll just answer that on a couple of dimensions. Look, I think sort of, you know, from an economic standpoint, you know, we'll work our way through this. But look, I guess I'm optimistic. I think it's going to be really hard over the short to medium term. But, you know, I think about some of the strategies that some people pursue around how they want to sort of manipulate society and so forth. You know, the being on the right side of things always ends up paying off over the long term. And I just have a lot of confidence that at the end of the day, the things that we stand for as a country, the very foundation, the foundational elements that this country was built on will prevail. I think about our own firm, and people have asked me a lot about how I think about diversity and our commitment to diversity. And I always respond by saying, I'm just trying to make money. You explain to me what you're trying to do. Because this country was the very thing that we talk about with sort of how we bring diverse ideas, diverse perspectives together to create better decisions and better outcomes. are the very elements that made this country the greatest economy in the history of the world, right? Diverse people coming from all over the world to come together to create this fabulous economy. Like, well, that's what we're just trying to do at our firm. And so these things that are right will prevail over the long term, and I'm just super optimistic that after a little scuffle, slugging it out, that America is going to emerge a stronger, better society over the long term.
Terrific. Well, on that note, aren't we lucky to have such great leaders in our city? And let's thank them.
Hello, everyone. Good evening. Another hand for this incredible panel. I'm Julie Scott, President and CEO of CTS Impact. Our firm is a hands-on business consulting firm focused on providing real-world industry experience across finance, HR, and IT to organizations going through major change. And since over half of our clients are a diverse mix of private equity-backed companies, we are very excited to be part of presenting sponsorship for this evening's event along with Houlihan Capital. Certainly, I can't thank the panel enough, this exceptional panel, Penny Pritzker, Marty Nesbitt, Suzanne Yoon, Brian Cressy, for an incredibly insightful discussion on the evolution of private equity. I was happy to hear we're ending on a bit of cautious optimism. At least I hear what I want to hear maybe, but encouraging. But hearing about the tremendous potential for growth in business, innovation, for companies right here in Chicago, it makes me hopeful for the future of our city. We're very grateful and appreciative for the diverse perspectives of the panel, including some common themes. Certainly hearing all consensus around it starts with the people and their leadership, as well as challenges around access to capital and liquidity in the midst of volatility and uncertainty in the markets. And then certainly technology, when to invest in AI, to what extent, what type, and how do you incorporate that into your business model and how you evaluate your businesses. So just appreciate all of you sharing your individual perspectives and being willing to be in community with us this evening. Also want to offer a huge thank you to the Executives Club of Chicago staff for, as always, impeccable planning and coordination for this event, as well as the servers here at the club. So now we invite all of you to stay, have another drink, continue the conversation. But on behalf of everyone at the Executives Club of Chicago, I want to thank you again for joining us and have a great evening. Thank you.